Welcome back. You're watching HFO-TV.
Back. Let's give a warm welcome to Amy Vander Vliet.
Thank you, Mark. And hello, good morning, everyone. I don't know if you heard, but the U.S. economy reached a milestone this past summer. The current economic expansion turned 8 years old in January, making it the second longest expansion in the post-World War II era. And if we can hold on to next May, we'll be the second largest. But for now, we're the third largest. It's also been a banner year here in Portland. So if I had to describe the economy in just a few bullet points, what's going on right now, this would be it. We have falling unemployment. The unemployment rate is down about a full percentage point over the year. We have sustained growth. Yes, it's moderated, and there's been some volatility recently on the upside as well as the downside. But we're still adding a little under 30,000 jobs over the year. We have a growing labor force. Much of this is due to the population growth that I know you guys are all aware of, but some of this might also be due to an increase in labor force participation, which is a good thing for us. And we're also seeing rising wages. Now, this metric was one of the last things to kick in following the recession. It didn't start to rise until 2014, but since then it's been rising pretty steadily. And year to date, it's up about 1.7, 1.8% over the year. So if I had to summarize the economy in just a few words, it'd be full employment. And I can say this with absolute confidence because there's no consensus on what full employment actually is. There's a lot of disagreement out there, so I'm right too. The Feds a few years ago said 5.6%, that's full employment. But the summertime, they said, nope, wait, it's 4.6%. Other economists think it's lower. So one economist, they wrap their estimates in words like uncertainty and approximately and conditional. One economist even went as far as to say, and I love this, I'm going to start using this, squishy. He talked about the full employment as a number being squishy. So if you're looking for a number for full employment rate, that's a tough ask. It's a moving target. There are a lot of conditions attached to it. Think of it more as a concept rather than a calculation. In a nutshell, full employment is when everyone who wants a job has a job. But if you want to put a little bit more meat on the bones, it's low unemployment rate. Could be 3.6, could be 4.6. It's squishy, right? We want to see job creation, or at least not job losses. Maybe even some labor force growth, but certainly labor force participation as more people are being lured back into the labor force because they see more opportunities and those rising wages. We also, in full employment situation, expect to see income growth. In a period of full employment, employers have to offer higher wages to attract and retain workers, and they might also have to cast a wider net. They might have to dig deeper into that pile of resumes that are on their desk and maybe hire a person with an incomplete skill set or some other characteristic that might have been a barrier to employment in a looser labor market. So full employment. So this is just what I described happening in Portland. So Portland is pretty much the textbook definition right now, example of full employment. All of this is happening in the absence of inflation. Typically, when you see wages rise, you see prices rise too, right? It's a consequence of full employment. But that hasn't happened yet. At least it hasn't happened yet, not yet. So for now, we've hit this economic sweet spot where we're enjoying full employment, but in the absence of inflationary pressures. So I want to talk a little bit more about unemployment, but before I do, it's worth mentioning what we mean by unemployed. So if you take anything away from what I'm saying this morning, I'd be happy if this was it. It's not a count of people who are receiving unemployment insurance benefits. That's not the total scope of the unemployed. To be counted as unemployed, you have to be 16 or older, you have to be without a job, you have to be looking for work, and you have to want work. Those are the requirements, that's it. And in fact, last I checked, and this was a few years ago, the number of unemployment insurance recipients made up just about a third of the total pool of unemployed workers in the area. So it's not just unemployment insurance recipients. During the recession, our unemployment rate skyrocketed. It reached a high of about 11.3% in the summer of 2009. And since then, it's been coming down. It's taking its time. It's going really slow. But in May or in the spring, we hit a new low of 3.5%. 3.5% is the lowest unemployment rate since comparable records began back in 1990. And I think if we were able to go back before that, that 27-year low would be extended. The 80s, I don't think, were a time of low employment here in the state. It's come up a bit since then. It was 4.1% in August, and September's numbers are going to be released next week. And if Portland follows the state, which it often does, you might see that tick up a bit. But still, historically low levels. So yesterday, the statewide unemployment rate came out for September, and it came in at 4.2%. Not the lowest, but close. And I guarantee you, someone called up the state economist yesterday afternoon and asked, 4.2, yeah, whatever, but what's the real unemployment rate? It's like fake news, fake unemployment rate. Maybe we don't release a fake unemployment rate. But I get what they're saying. What they want to know is not only how many people are out of work and looking for work, they want to know how many people aren't even looking anymore because they're discouraged. They want to know how many people are working part-time but would rather be working full-time, but they can't find full-time work. So it's a legitimate question, and we have an answer. The answer is 8%, maybe 8.1. It's about twice as high as the headline rate of unemployment, but it's down from 20% during the worst of the recession, and it's also down below where it was before the recession. So this is another sign of a tight labor market and full employment. So turning to jobs, 2014 and 2015 were banner years here in the Portland metropolitan area. We are adding between 2,500 and 3,000 jobs every month on average. Annual growth rates were approaching 4%, and that was crazy, especially following years of very respectable growth at 2.5%. No one expected to see this is like the 1990s all over again. No one expected to see this happening again, and it did for a couple years. So it's like we found a gear that we didn't know we even had access to anymore. But something happened on the way to 2016. Things began to slow. We were adding only 2,300 jobs a month instead of 3,000 or 3,500. So what happened? Manufacturing hit a soft patch. This wasn't just locally. It wasn't just Intel. It wasn't just high tech. It was happening across the nation. And it was a global thing. It was an export-driven thing. Our trading partners were weak, and the dollar was strong. So we saw declines not only in high tech, but we saw it in metals and machinery, pretty much in most sectors, with a few exceptions, in the manufacturing industry. But I'd argue that job growth was also held back by a lack of supply of workers. Employers probably could have created more jobs, especially in construction, if they could only have found the bodies to fill those jobs. So you fast forward to today, manufacturing is back in growth mode. High tech is still in the red over the year, but other components are up, like machinery, wood products, and food processing. That's a bright spot in our manufacturing sector statewide. We're growing by about 2.5%. It's the slowest pace in 4 years, and that's okay. This is fine. That 3.5% was unsustainable over the long term. 2.5% is still healthy, is still respectable, and it's more than enough to keep up with population growth and more than enough to keep unemployment rates down. The thing about a recent slowdown is that it's broad-based. Just like the growth in 2014 and 2015 was broad-based, and it was, trust me on that, the slowdown has affected almost every single industry in the Portland metropolitan area with the exception of two. One is health and education, which is driven by our strong population growth. And the other is transportation and warehousing. And that got a nice bump up from Amazon opening up the fulfillment center last year in Hillsborough. And also one thing I want to mention about a recent slowing is that we're not alone as a metro area. All but 9 other major metropolitan areas across the nation are growing more slowly today than they were a year ago. So I look at this 2.5% growth. I look at the broad-based nature of it. It's down from 3.5. That's okay. I look at what started happening in 2016, and I'm not worried. I'm not concerned. Because like I said, while some of the slowing might be due to economic weakness here and there, you do have the Intels, you do have the Nikes, The larger story behind this deceleration, I'm going to repeat myself, but the larger story behind the deceleration is that we're at full employment. In the current environment, job creation is being constrained more by a shrinking supply of workers than it is by any sort of cyclical downturn or weakness. Income is up. I mentioned this earlier. This is another measure of income, median household income. It declined during the recession, took a while to kick in, but it did. Now we're finally back to where we were before the recession hit at about $64,000. This is 15% higher than the average metro area. The other thing to note from this slide is that the average metro area has not yet recovered their income losses from the Great Recession. They're still below where they were before the recession hit. And I didn't have time, there's 2016 data available now, I didn't have time to stick it in, but if I did, you'd see that line continue for the Portland metro area. We saw a 6% increase in median household income, and this is inflation adjusted. So we're up to about 68% right now. We've had 2 years of solid growth in household income. And I wanted to touch on population growth briefly, because I'm probably running out of time, but it's a really important part of our economic success story here in Portland. And I think it's also relevant to you folks in multifamily housing. Migration is huge in Portland. It accounts for, at least in good years, 2/3 of our population growth. Last year, 27,000 people moved to the Portland metropolitan area. That's 75 people a day. The thing about migration, our migration, is that these people who are moving here tend to be young and they tend to be well educated. So they're making us more than the overall population. So they're making us younger and they're making us smarter. I migrated here years ago. And I mention this because I think there's been a shift in how businesses decide where they want to locate. I think years and years ago, they used to decide based on more economic-y factors, like taxes, tax breaks, the cost of real estate, the cost of water. You know, maybe the CEO wanted to live in a certain area, so he located his company there. And then they'd set up shop, and the workers would follow. That's still happening. Don't get me wrong, but I feel like there's been a shift. It seems like businesses more and more are making their location decisions based on where their workers want to live. So instead of workers following businesses, you see businesses following workers. And this is just not in the Portland area. You look at Chicago, you look at Connecticut. Connecticut, it has some of the lowest, if not the lowest, business taxes in the nation. It's the insurance capital of the world, right? No, workers don't want to live in Hartford anymore. They want to live in Boston, and they want to live in New York. So Aetna Insurance is moving from Hartford to New York. GE is moving to Boston because that's where their workforce, that's where they can find and recruit top talent. That's where their workforce wants to live. And I was talking to some site selectors from California a few months ago, and they said that Portland never used to be on their radar. They would fly from the Bay Area up to Seattle. They'd look down at Portland and through the airplane window and say, yeah, it's a cute little town, but whatever. But now we're on their radar. We're on their radar for a variety of reasons, but one of the they don't mention tax breaks. They don't mention the more economic-y factors. That's at play, but what they mention is that's where their workers want to live and that's where they can find top talent. So we're on their radar now. So wrapping up, the economy is still chugging along, although peak growth is now in the rear view. We don't expect to see that again. I said that before, I was wrong, but I'm pretty sure I'm right now, at least for the near term. And that's okay, because that 3.5% job growth was unsustainable in the long term. Statewide, economists are forecasting, and this is Josh Lehner, who I think has spoken, I know has spoken here in this, to this group before. Josh in his shop is anticipating that we're going to grow by the state by about 2.1% by the end of this year, and this similar growth in 2018. And Portland should follow suit. They don't see a lot of headwinds at this point. And they say that Oregon's job growth should continue to outpace the average state, which it has for years now, and Portland should continue to outpace the average metro, which it has, as long as we can maintain those three fundamentals that have served us so well in the past. And that's the ability to attract and retain a skilled labor force, and this ties very, very closely to quality of life, as long as we can maintain our industry structure, the diversity that we have now, and as long as we can remain a favorable climate for new business formation. And finally, I was asked if we're heading into a recession, and the answer is yes. It's not a question of if, it's a question of when. The business cycle is alive and well, and recessions are part of that. We just don't know when the next recession is going to hit. But it's safe to say, with this current expansion at 8 years old and counting, we're closer to our next recession than we are to our last. But if you look at the national forecasting, Global Insights put the probability of a recession over the next year at about 20%. The Wall Street Journal consensus puts it at about 15%, so that's pretty low. So chances are we're not going to enter a recession in the next year or so. But when it does hit, be assured that when the recession hits the nation, Oregon will follow, because Oregon has never missed the U.S. recession, but we've never missed a U.S. recovery either. So thank you.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.